Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. The market's looking pretty good, and it's a nice way to wrap up the week, which so far has actually been pretty good. I mean, all in all, nothing to really complain about. The Nifty is up 84 points. The Sensex is up 332 points. And for the week, by the way, the market is on track for a 2% plus kind of a gain after being flat for the last couple of weeks. I mean, actually, last week was absolutely flat for the Nifty and the Sensex, while mid-caps and small caps did better. This week, I mean, the Nifty itself is starting to participate, and it's not been a bad week for the small cap and the mid-cap indices. I mean, the small cap index will wrap up this week with a near 4% gain, better than last week, and same is the case for the small cap index as well, and it's going to be a good one for that as well. So, I mean, lots to talk about. The broader market is looking pretty good. Earnings are coming through, and more often than not, they're encouraging. Mitesh Thakkar is with us, joining us on the top of the show for some quick thoughts on the market. Mitesh, good morning. So 84 higher, new highs. What would you be doing? Buy the highs?
In fact, Prashant, we've been buying the markets for last 3-4 days. I think the fresh breakout which has happened on the bank Nifty. So while the Nifty continues to go higher, I think the idea would be to trail stop losses over there. But the bank Nifty getting past 27,500, it was a very important technical level. So now a fresh top of 27,450, excuse me, can be taken, and long positions can be taken for targets on the upside, which could be closer to about 28,000 as the next logical level. And in the bank Nifty pack, if you were to ask me, I think the PSU banking lot, the short-term charts are much more positive over there, so they might outperform in the next few days.
What kind of names there in the PSU banking space?
So we had a buy on State Bank yesterday. I think that's already done the targets on the upside. We're still looking good, but otherwise, I think that apart, Bank of India, Union Bank, Canara Bank still show more promise of upsides happening, and I think we will see about 8 to 9 to 10% kind of a rally over the next few days in most of these names.
And the PSU bank index is up 12% this week. But Mitesh, I mean, you would agree we've seen these kind of big moves on earlier occasion as well, but very tough to call when they actually start to peter off again, right? They always have.
That's right, Prashant. Yeah, so that's right. I think, but again, I think while they are still not investment buys, the long-term charts still don't show any promise. But I think in the short term, they keep offering you this 20, 25, 30% kind of trading rallies, which traders can participate and then get out. So for the timing, it looks like that this week starting, I think the PSU banking index has started some kind of an up move again, which might spill over for next about 5 to 10 days, which is basically 1 to 2 weeks for the next for the coming time. And I think that should offer you a good trading momentum. So we've been advocating, as I said, buys on State Bank and Canara Bank yesterday, but even at current levels, Union Bank, PNB do offer some kind of a trading upside.
What would your trades be, Mitesh?
Yeah, I have two buy calls. In fact, both of them mid-cap kind of stocks. Balrampur Chini, I think, is now trying to give a reversal. So keep a very tight stop at 68. Look for targets of around 76. And again, another beaten down stock which is participating on the upside is Castrol India. That's a buy with a stop at 167 for targets of 185.
Okay, we've got some questions from viewers. Vijay has 80 shares of Kajaria Ceramics, cost is 605. Wants to know whether you should hold or sell, Mitesh. Kajaria.
While the long-term charts are not good and therefore it warrants a sell, I think the stock has declined a lot on the medium-term charts and the short-term charts, extremely oversold. So again, I would possibly look for some kind of a bounce-back rally over here and suggest that the exit possibly should be held till the stock price bounces back to about levels of 530 to about 550 on the upside. So for the timing, it's in hold, but I think eventually I don't think that the long-term charts are showing much promise and that the stock could do extremely well for the next 2 to 3 years kind of an investment horizon. So I think whenever you get a trading rally, close at about 530, 550, try to exit.
Thanks very much, Mitesh. We speak again soon. Appreciate you joining in. Chris Subramaniam is with us, Altamount Capital. He's with us with some F&O trading ideas. First up, the index itself, Krish, what would you do?
Morning, Prashant. Yeah, Nifty has broken past the previous high, but the momentum seems to be still very strong. So I think we could still be heading upwards. Minimum target for the current series probably will be somewhere around of range of 11,400 to 11,450. But I'm keeping with the momentum which is there in the on the banking pack. So giving a covered call on the bank Nifty futures, one could possibly buy the August futures and also sell a 27,800 strike call that's quoting into around 85.90. Keeping a target of 27,800, and one could possibly keep a stop loss of 27,475. And again, going with the banking momentum, the PSU banks, as we've already been discussing, have also seen some pretty aggressive roles. So I think considering the fact that they have all got beaten down very badly last couple of years, this could be one short-term move which could see them hog the limelight in the August series. So going with the theme, a covered call in Union Bank, this has also seen some pretty sharp put writing at lower levels, and therefore the momentum could continue, and one could also sell a 95 strike call to be on the safer side. That's quoting at around 2.5-3 rupees, keeping a target of 95, and maybe one could keep a stop loss of 80. And the second one is a bull spread in Bank of Baroda. I think they are announcing the results today, so we could see some volatility. So bull spread would help to manage the volatility. One could possibly do the spread between 140 strike and a 160 strike. So what I'm suggesting is buy a 140 strike call, sell a 160 strike call. So the net cost comes to about 6. The maximum gains that one gets, so one would get possibly 14 rupees, and also recommend a stop loss of 3. So in terms of a risk reward, I think could offer a good rate.
Krish, thank you very much. Appreciate your trades. Good speaking with you, as always. I just want to highlight a couple of stocks before we go on to the next story. So these are large gainers in the market with the largest volumes. So price plus volume. So ITC, I just want to start with that. Then followed by Biocon. Biocon has been up 9% now for a while. You've got Idea, which is up 4.5%. It's at about nearly 60 rupees now. Reliance Capital is up 4.25%. There is Federal Bank, which is up 5%. Large volumes again on this one. Look at what's happened with SRF. Almost 15% move this week. SRF back at about 17.13. It fell to 15.50 or so not that long back. There is RITES, relatively newer listing. It's up 5%, large volumes. Naveen Fluorine, I think results came through recently, 6.5 higher. And then there is something like a V-Guard, which is up about 4% as well. There's more stuff. Muthoot Capital, Motilal Oswal, IDFC, Godfrey Phillips. All in the between 4 and 7% range of gains that we are seeing right now. So it's, actually a pretty vibrant looking screen, especially in the broadest markets. Okay, we move on with the big story and the big deal that my colleague Nisha Podar broke first. She told you that Hindalco is interested in buying out and actually the subsidiary of Hindalco, Novelis, is interested in buying out Aleris. That's a US-based downstream aluminum company for about $2.5 billion plus. The announcement was made yesterday. You heard from the management giving out details. Nisha sat down with Kumar Mangalam Birla and began by asking him whether it is the acquisition or the success with Novelis which gave him the confidence to go ahead with buying Aleris. Listen in.
Novelis is a very valuable company today. It's, to our mind, valued at between $10 to $12 billion. It's also a global leader. It has consolidated its leadership position globally in the last 10 years. Very profitable, and it's a prized asset in any which way that you look at it. I think Aleris is a step forward in the Novelis story of increasing Hindalco's share of value-added products in its product mix. Aleris takes that ambition forward. It gives Novelis a foray into some new segments. For example, building and construction. For example, very interestingly, aerospace. So in aerospace, it gives Novelis access to customers like Boeing, like Airbus, like Bombardier. So you have very sort of revered marquee customers that also come in terms of franchises along with Aleris. So absolutely, I think the success of Novelis has been very encouraging, and that is what has spurred us to now take the next big step forward with Aleris.
How long has it been on your mind to buy out this company? What has been the process taken? And what made you zero in on this asset?
So like any other acquisition, I think that the idea was to enhance the value-added product portfolio, to get into some spaces where we didn't have a presence, like I said, auto, for example, aerospace, for example. Aleris is known to be a very high-quality asset. I think the valuation is very reasonable, if not on the lower side. If you look at other transactions in this space. It also has 13 very high quality, high technology manufacturing centers across the US, across Europe and China. So great asset, great quality. It is accretive from the first year itself, both in terms of net profit, free cash flow. So I think as a package, it's a very attractive transaction.
Of course, this brings in a lot of strategic benefits. It's a strategic fit to Novelis. And also with this, Novelis is getting into more high-end and high-margin product segments as well. But what is the kind of synergistic benefit that you're going to gain in terms of numbers from this? And when is it going to start kicking in on your balance sheet?
So several synergistic benefits. For example, on SG&A, for example, on supply chain. Also, both companies have a complementary set of assets in China. So it deepens and enhances the Asia play. Right. And as you probably know, Asia is the highest growing market at 14%, which is very attractive for aluminum, especially in the auto segment.
Yes.
Other than that, I think you have synergy expectations of about $150 million yearly on a recurring basis. And this is not taking into account synergy on account of auto. So very attractive again.
Going on today, you're with us here on Trading Hour, 77 on the Nifty, which means we've given up about 5 or 6 odd points from the day's high. One of the names which actually is jumping up has been Biocon. It's up 9%, has been that way now for a while. And my colleague Ekta is now joining in. She's been actually hooked onto that Biocon call, Ekta.
Yes, absolutely. There was
bullish
a
commentary.
Yeah, extremely bullish commentary, which actually came in from the management with regards to the biologics segment. So that's the reason why you're seeing the stock up around 9% odd. But separately, we have our systems, which is actually spiked up to the high point of the day. EBITDA, which has grown around 63% odd on a year-on-year basis. And the profit has come in at around 9 crores for the quarter as well, versus around 3 to 4 crores same time last year. So I think there's been a good spike up, which is come in on our systems on the back of that number. I think it's sequentially, not year on year, but sequentially is the kind of improvement that we've seen for them. Kirloskar as well, revenue up around 8% odd to 456 odd crores. But quickly, let's discuss what exactly is taking place on the global scenario. We have Michael Every of Rabobank joining in to discuss this. Michael, I'm going to start with a little bit of an unconventional question, because maybe these FANG stocks in the US would only be limited to sentiment in the US equity market. But wanted your sense in terms of, you know, what people are talking about when it comes to big shares such as Facebook and the kind of disappointment that we've seen from a couple of these FANG stocks this time.
I don't know, because I don't cover any of those areas. I apologize.
Okay, but in your sense, where exactly is the US market then?
Well, the US market is still a hostage of just general sentiment in terms of, you know, the upswing that we're seeing gradually, steadily, month after month after month now, versus, you know, the underlying reality of the Fed raising rates. And at what point does the two intersect? And which one is going to blink first? Is it going to be the Fed, or is it going to be the equity market? I mean, I'm not original in saying that. It's not a particularly new view. And it certainly hasn't stopped stocks performing, you know, well month after month after month. But at some point soon, we're going to reach an inflection. And we will find out which one of the two is going to give.
You've held that view, Michael, for a while. And at some point, I mean, you know, it will, I guess, get to a point where the prophecy comes true. But in the meanwhile, is this risk-on environment, can this continue for a while? I mean, as they say.
Well, it can do. I mean, yeah, the classic phrase that everyone rolls out time after time again, because it's such a good one, you know, is the market can remain irrational longer than you can remain liquid or solvent. And that's absolutely still the case. You can make a very compelling argument, you know, that risk should be very firmly off, even if it's still on in places. But to my mind, this is all really, let me be blunt, you're picking up pennies in front of a steamroller. I simply don't see what the rationale is here, unless you're, you know, desperately trying to squeeze out a few percentage points, you know, in a quarter and then go and retire somewhere. Because from the bigger picture geopolitically is so concerning. When you have just the random example, any particular day you can pull out headlines that worry you, and most of the time they don't actually mean anything. But if they do, they really are serious. Just today, we've got the ABC News in Australia reporting that within a month or two, the US might be at war with Iran. Now, you tell me that it's the right time to start buying equities and being risk-on that particular basis, even if there's only a 10 or a 15% chance the story is accurate. I don't see what the rationale is other than that, I've got money and it's my job to buy them, so I have to keep buying them. I can't objectively see why anyone would do it.
Okay. Just on that point, Michael, do you expect, how closely are the markets watching this whole relationship and this, a tweet war or exchange taking place between the US president as well as Iran? Are people on tenterhooks with regards to that, or do you think that will be a North Korea kind of situation which people are factoring in?
Well, I think that's a great question, and I think that is the key issue. What I think now is people are looking at what happened in North Korea and saying, well, therefore this doesn't mean anything. So the first dog barked and barked but didn't bite. Therefore, I've learned that dogs don't bite. Well, that's not necessarily true. And if you're wrong, then you're going to get very badly bitten. Now, I don't know what the reality of the situation is. None of us do. The only two people who do are maybe Donald Trump and the president of Iran. But what's your risk reward? What's your upside relative to your downside of this not being a repeat of a benign North Korean scenario? Just think of it in those logical terms and then think about what you should or shouldn't do.
Michael, but fair enough. Just one last point. You said it's like picking up pennies in front of a steamroller, but it's added up to a lot of pennies, right? A lot of money for a long time. I remember reading a note, a very convincing note from a hedge fund, I think called Crescat Capital. This was late in 2017, and they made absolutely stunning historical arguments for why this was it. The US market was toast. And look at where we are now, right? So there will always be some probability of some apocalyptic kind of prediction coming true, right? That's always the case. You'd agree?
No, absolutely. And look, I will be blunt and say it live on air. I'm not the world's best trader by any means. I'm not a trader at all. I just try and focus on the fundamentals. And there is always the opportunity to think, yeah, actually, I can make a bit of money this quarter or whatever. But if you're thinking strategically, if you're the CFO of a company and thinking, I want my company to be around in the next 100 years like it's been around for the last 100 years, presumably you're not only focused on the next couple of months. You're actually focused on what the longer-term outlook is strategically. And on that front, you can ride a wave like you did in the US in, say, 2003 to 2007. You can ride that all the way up and then lose everything in 2008, 2009. So these are the messages you have to look out for, that that way it can be fantastic. Everyone's making money, everyone's clever, and then suddenly everyone's caught very short.
Okay, all right, Michael, we're going to leave it on that note. Thanks very much for joining in, and wish you a good weekend as well. Well, for us, the mid-cap index is doing quite well, so up around 1% and the Bank Nifty financial second day running, where the Bank Nifty is outperforming, or rather seeing that follow-on buying, so up around 0.6% currently.